Back in the 1980s, there was this wild episode with the Hunt brothers trying to corner the silver market. The system pushed back hard and eventually broke them. That story has become legendary in financial circles. But here's the kicker. If you think that was the most ruthless suppression in financial history, you haven't been paying attention to the last decade. Because the real story, the one that was almost invisible to the casual observer, was happening not in silver, but in XRP. While retail investors were distracted, shaken out by a storm of lawsuits, fear, uncertainty, and doubt, the real players, the strategic minds in crypto and finance, were quietly accumulating. Millions, no billions of tokens were quietly moving through over-the-counter deals, bypassing the exchanges entirely, finding their way into the vaults of sovereign wealth funds, central banks, and institutional custodians. For years, this has been happening quietly behind the scenes while the public watched the price stagnate in a narrow range, unable to see the machinery at work. Now, here we are in early 2026, and the veil has lifted. The numbers are no longer hidden. Exchange liquidity for XRP has evaporated to levels not seen in 8 years. Spot ETFs are mopping up whatever is left, operating like financial vacuum cleaners, and the supply shock that analysts have been warning about is no longer theoretical. It is now a programmed inevitability. To really understand what's happening, you have to look past the charts and the screens most people obsess over. The public sees price movement, the highs and lows, the daily fluctuations, but the real action has been in accumulation, execution, and strategy. Exchange balances tell the story. Data shows that the total XRP held across all centralized exchanges has plunged to somewhere between 1.5 and 1.7 billion tokens. To put that in perspective, in early 2025, platforms like Binance and Upbit were holding roughly 4 billion tokens in reserve. That's a drop of over 57%. It's massive. This isn't accidental. This isn't a market correction. This is deliberate, methodical accumulation by the smartest players in the ecosystem. While retail was being subjected to artificial suppression, price ranges meant to shake out weak hands, the OTC market was thriving. Billions of XRP have been migrating from liquid exchanges into cold storage, operational payment corridors, and institutional vaults. These aren't tokens that will come back for a quick trade. Once they enter these vaults, they're gone from the market, essentially removed from the supply pool forever. And the implications are staggering. When over half of the tradable supply vanishes from the very platforms where 99% of trades take place, you're not just seeing a temporary dip, you're looking at a compressed spring, coiled and waiting for the next catalyst, whether that's regulatory clarity, a liquidity shock, or another macroeconomic trigger. The retail liquidity pool is shrinking at a pace we haven't seen before. What was once a foundation is now a fortress. And the question for every investor today is simple. Are you watching the trembling hands of retail traders, or are you noticing the iron grip of institutional accumulation? Now, if the shrinking exchange balances were the smoke, the rise of spot XRP ETFs is the fire. In just over 50 days since late 2025, these funds, led by major players like Canary Capital, Franklin Templeton, and Bitwise, have hoovered up over 786 million XRP. In historical terms, XRP has become the second fastest cryptocurrency to cross the $1 billion AUM mark, only behind Bitcoin. This isn't about volatility or hype. This is about sticky capital. Pension funds, university endowments, wealth management giants, they're not dabbling. They are systematically moving XRP into their institutional grade vaults, permanently removing it from retail circulation. Every ETF purchase represents a one-way street. Tokens come off exchanges and never return. They are locked away. This is where the real math comes into play. Combine the exchange drain down to 1.5 billion tokens with 786 million sucked up by ETFs. And suddenly, what appeared to be a substantial supply turns into a tiny fraction of the total. The ecosystem is moving from abundance to scarcity. The so-called FUD about too much supply has been overwhelmed by an unprecedented wave of institutional demand. When the $4 trillion tokenization wave hits, there simply won't be enough XRP at these prices to facilitate the volume. The narrative of XRP is cheap isn't just a talking point, it's an operational reality. Layered on top of this is the mechanism that turns XRP into a deflationary powerhouse. For years, critics have pointed to the escrow releases, claiming that Ripple was dumping the market. But the reality is almost the opposite. On January 1st, 2026, Ripple executed a scheduled release of 1 billion XRP. Most of these tokens, 700 to 800 million, were immediately relocked into new escrow contracts stretching as far as 2028 and 2029. The remainder isn't meant for retail speculation. It's strategically allocated for operational liquidity in real-world flows, such as the $15 billion currently moving through on-demand liquidity, ODL corridors. Ripple cannot dump even if it wanted to, and the system is engineered that way. The burn mechanism compounds this scarcity. Every XRP transaction, whether it's a settlement worth millions or a tiny NFT trade, incinerates a micro fee permanently. As network usage grows, so does the daily burn rate. Analysts now project that at peak institutional activity, the XRP ledger could be burning up to 1 billion tokens annually. Consider this in the context of a fixed 100 billion token supply, billions already locked away, and the accelerating burn rate. What we are witnessing is the gradual transformation of XRP into a high-demand, low-supply asset on a scale that defies conventional financial logic. Think about it. The exchange liquidity has been drained. ETFs are hoovering up hundreds of millions, escrows are locking away vast amounts, and daily burn rates are escalating. The liquid supply is now a sliver of what headlines report. One side of this equation is insatiable demand fueled by trillions in tokenized assets. The other side is a supply that is programmatically being removed, burned, and institutionalized. The math is undeniable. In a world of quadrillions in derivatives and trillions in cross-border settlements, XRP is a tiny, finite lifeboat. And the tokenization story doesn't stop there. The XRP ledger has officially evolved from a mere payment rail to a global settlement layer for real-world assets. Institutional adoption isn't hypothetical. It's happening now. Volumes of tokenized assets on the ledger have surged from $19 trillion to over $33 trillion in a single year. This isn't about trading volume, it's about real institutional balance sheets moving on-chain. Treasuries, stocks, corporate debt, all being settled instantaneously via XRP. Ripple's regulated stablecoin, RLUSD, acts as a multiplier here, providing a safe harbor for liquidity, while XRP serves as the universal bridge for instant sub-penny settlement. Swift and legacy systems simply cannot match this efficiency. If XRP captures even a fraction of the global tokenization market, the demand will collide head-on with a supply that is already at 8-year lows. This is no longer an alternative investment. It is the plumbing of the 21st century financial system. Institutions aren't buying XRP to trade. It's a tool they cannot operate without. The chains of the old system are breaking, and the real question is, do you hold the keys to the new system, or are you waiting on the sidelines for the perfect moment that has already passed? We've reached the point of no return. Evidence is overwhelming. From the record low exchange liquidity to the $1.3 billion institutional vacuum created by ETFs, the story is clear. XRP is both the most suppressed and the most strategically positioned asset in financial history. Regulatory obstacles, long a source of uncertainty, are being removed. The Digital Asset Market Clarity Act of 2026 is the final fuse. Once that legal certainty arrives, the risk premium evaporates and what was once wait-and-see money becomes all-in capital. Experts who have been pounding the table on this are not chasing short-term pumps. They are anticipating a paradigm shift. Trillions in tokenized assets are meeting a supply that is literally contracting every day through institutional lockups and token burns. The valuations we see today will, in hindsight, look absurdly low. Institutions have spent years shaking out impatient investors, and the data shows they've succeeded with those acting on emotion, while those who remain rational are positioned to benefit immensely. At the core of this transformation is patience and observation. It's not the day-to-day volatility that matters, it's the underlying infrastructure. The exchange liquidity drain, the ETF accumulation, the escrow discipline, the burn mechanism, and the massive wave of tokenized assets. This is the groundwork for the most significant financial shift of our generation. XRP is becoming the backbone of global settlement, bridging currencies, securities, and real-world assets with a speed and efficiency that legacy systems cannot match. So the question for every participant today is simple. Are you focused on fleeting market noise, or are you watching the mathematically inevitable restructuring of global finance? Haste leads to loss. Calm analysis leads to victory. The evidence is clear, the rails are being built and fortified, and the future isn't waiting. It's being constructed in real time with XRP at its foundation. For those who can see beyond the charts, beyond the daily price movements, this is the moment to understand the magnitude of what is unfolding. We're not speculating, we're observing systemic shifts with on-chain evidence. Every transaction, every lockup, every ETF allocation, every burn brings us closer to a world where XRP is no longer an optional asset. It is essential infrastructure. The implications for liquidity, for settlements, and for the global flow of capital are profound. As the calm analyst, I see the numbers, the mechanics, and the trajectory. And I tell you this, the time for watching from the sidelines has passed. The transformation is no longer a question of if, it is a question of timing, positioning, and rational patience. Stay focused, stay patient, and observe the data. The market is being reshaped beneath the surface, and XRP is leading that transformation. The final fuse is lit. Regulatory clarity is imminent. Trillions in tokenized assets are ready to deploy. The liquid supply is shrinking every day. Burn rates are accelerating. Institutions are consolidating. And the future, as always, belongs to those who plan for it rather than chase it. I am the calm analyst, and this is not speculation. It is analysis. The system is evolving, the old chains are breaking, and XRP is at the center of the new financial reality. Stay rational, stay patient, and most importantly, understand that what is happening today will define the financial infrastructure of tomorrow.